Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host Neena Mishra. In this episode, we talk about lumber markets and timber ETFs. Now we know that lumber prices have skyrocketed this year, mainly due to disruptions caused by the pandemic and unprecedented demand from housing markets. So the prices have come down a bit in the past few days after reaching a record high earlier this month, but it seems volatility is here to stay. So my guest today is Brooks Mendel, President and CEO of Forestry, which is a forest industry consulting firm, and Brooks is an expert in this area. So with him, we'll dive deep into lumber markets, the lumber price surge, what caused the surge, who benefits most from the surge, and also his outlook for lumber prices. And in the second part, I'll talk a little bit about the two timber ETFs that investors could look at. Joining me now is Brooks Mendel. Brooks, welcome. Great to have you on the show. Thanks so much for joining us.
Thanks for inviting me.
So lumber, it seems, is one of the hottest commodities in the US this year. And so I wanted to start with lumber prices, what really happened. And lumber prices had actually plunged in March last year after coronavirus hit and we saw shutdowns. But after the economy slowly reopened and we saw this mass migration to suburbs and a lot of remodeling, lumber prices started climbing. So tell us what happened during shutdowns and after that, and why have lumber prices skyrocketed this year? And for context, please also tell us where lumber prices have traded historically, say, over the past decade or so.
Sure thing, Neena. Yeah, it has been a remarkable trend on prices, and we have a lot of classic supply-demand factors taking place. But as you noted, last year, first quarter, lumber prices fell, and that happened just as COVID hit and just as we had a recession. And the expectation in the marketplace was that everything was going to slow down. Housing slowed down for a moment, and the producers, the sawmills themselves, they also slowed down. That sector basically shut down for 4 to 6 weeks, expecting nobody to be out there buying lumber. And what actually happened is everybody stayed home. Everybody did those do-it-yourself projects that they'd put on the shelf. Repair and remodeling took off. And as you noted, people did start moving to the suburbs. So housing starts really never slowed down. They just kept cooking along. So what you had is people went to Home Depot and Lowe's. The construction firms went out and bought up all the inventory. And sawmills have been playing catch up ever since. And it's been that simple. It's actually quite hard to ramp up lumber production in a short period of time. And so demand has never slowed down. And even now it's a little bit higher than it was last year. And so sawmills continue to play catch up. And we've been watching sawmills invest in their capacity, new ones open up, expansion is starting to grow. And so you start to see things catch up, but that's where the high prices came from. You asked about historical pricing. You know, in the past, if you look, let's say over the past 10 or 20 years, when you're talking about softwood lumber that gets used to build homes, typically you're using numbers like $300, $400, $500, $1,000. And now you have prices that are 3 times that. So it's been remarkable.
Amazing, amazing. So I read an article in the Wall Street Journal recently that even though lumber prices have surged, timber growers are still getting the lowest price in decades for logs. So tell us why that is, why timber growers have not benefited from the surge in lumber prices.
Yeah, so this story with forest owners and timberland investors is really a regional story in the U.S. You know, with timber markets, timber being the actual trees that you grow in the ground and the logs that you cut out of those trees, those markets are uniquely local. You don't really cut trees and ship them all around the country. You cut trees and you deliver them to a place that's 50 to 100 miles away that pays for those logs and turns them into something else more valuable, such as lumber or plywood or paper or other products like that. So those timber markets, like with the article you read, if you looked at the Pacific Northwest, Oregon and Washington and the coastal regions west of the Cascades, those log prices are quite high and timberland investors are doing really well. Prices are very strong and the supply-demand of logs to mills is in balance. But that article focused on the U.S. South, and we do have a different story in the South. We have 40 to 50% more wood in the woods, in these forest owners that the reporter was talking to, than those forest owners had 15 years ago. We've been accumulating wood at a rapid rate, and that really started after the 2007, 8, 9 recession. Demand dropped 40% for those logs. Everyone slowed down. And meanwhile, trees have been growing faster than they've ever grown. We planted a lot of acres in the South in the 1980s, and those trees were just becoming mature. And so we've been accumulating wood. It's just like compound interest, growth on top of growth for 15 years. And so we just have an imbalance right now. We're swimming in wood in the South. And for that reason, when sawmills are out there buying logs, they have so many options. They can, they're the pretty girl at the dance. They can go out there and they can dance with whoever they want. They are in a position where they're not constrained when they're out there buying trees or buying logs. And the forest owners, meanwhile, they have a ton of trees out there. And so they're in a waiting period. The good thing for forest owners in the South is that with all these sawmills investing and new sawmills opening, forestry is a long-term business. And if you're asking yourself, well, should I plant more trees to grow logs to sell in 20 or 30 years from now? The South is a great place to be because we have so many new mills or old mills that have been recapitalized. The sector is really healthy. And so that's a nice story if you're a long-term investor in timber.
So this is obviously a very interesting market, and I think few people understand the market properly. So could you talk a little bit about the market, the ecosystem, just an overview of the various players and the market, the supply chain from trees to lumber, which we buy from Home Depot, or lumber, which goes to home builders?
Sure. So we'll just start at the stump. We'll start with the seedling. The United States at a high level, we have a country that's about 2.1 billion acres in size, and about a third of the country is in forests, about 700 million acres, and about 2/3 of that is privately owned. But the part of the industry, the acres in our country that really feed most of the sector are those private forests that are located in the South and the Pacific Northwest. There's some in the North and in the Lake States and New England, but in terms of the softwood trees, the pine trees in the South and the fir and the hemlock in the West that feed these sawmills we're talking to, that's where most of the action is. 95% of the softwood lumber produced in the United States is produced in the South or the Pacific Northwest. So that's where the mills are. So you have forest owners in those places. They plant trees, and they plant trees on rotations, which is the age of the tree that they are when you harvest them, of 25 to 50 years, depending on where you are in the species in the country. And when folks are ready to harvest their trees, there's a supply chain out there that includes loggers and truckers that are out there harvesting the trees and putting those trees on trucks. And when they put those trees on trucks, they're really not traveling more than 50 or 70 or 80 or 100 miles. All those little wood baskets, it's like a massive quilt. Each one is a little square or a little circle on the map. And the lines don't cross that much. And you stitch those together and you get the entire network of local markets in the South and in the West. And when you look at what the sawmills are doing, they're located in those little markets. And when they produce lumber, they're buying trees that are going to be delivered to them that cost, let's say, $40 or $50 a ton. And they'll take 4 or 5 tons of those per 1,000 board feet, and they turn it into producing lumber. The logs represent 60 to 70% of the cost, the break-even cash cost of producing lumber. And these sawmills, when they produce the lumber, they turn around and they do have the ability to ship that lumber really anywhere in the country. There's a sawmill I was speaking to recently in Alabama, and they ship lumber to 32 different states. The north of the country, the Lake States and the Midwest and New England, that part of the country is, if you're thinking in terms of being long and short, they're short lumber. They depend on the West and the South to help satisfy their wood needs. When you look at where that lumber goes, it goes into a few different buckets. There's industrial applications, but most of the wood that we use goes into residential. And when it goes into the residential market, that means it's going into building new homes, or it's going into repair and remodeling. R&R is the shorthand. So that's what happened last year in Q1 and Q2 is the R&R market held strong and took off. Right now, the housing stock in the United States is as old as it's ever been. So there are houses that are, to overstate a little bit, falling apart, but they need to be fixed up, or people want to add a deck, or they got to fix a wall or a floor or an eaves or something. And so that R&R market is really strong. And when housing prices are high, or when we can't get access to the labor to build new homes, people focus on that R&R market. They fix up their home. They need lumber to do that. And then they wait for a time in the future when maybe they're going to move and buy a new home or do something else. But that R&R market and the new home construction accounts for most of the use of softwood lumber in the U.S.
Very interesting. So as you mentioned, R&R home buyers and home remodelers, they will probably feel the biggest impact of the rise in lumber prices. And you also explained why timber growers have not benefited from the surge in prices. So who is benefiting the most from these soaring lumber prices? Is it the sawmill owners?
Yes, by far, there are several people in the supply chain who are benefiting, but far and away, Nina, you're exactly right, it's the sawmill owners and the lumber manufacturers that are capturing most of the uptick in pricing. They're capturing the margin. And there's a little bit of gain also on the part of distributors and home sellers. Since Home Depot and Lowe's are publicly traded, you can see it in their financials. Ever since Q2 of last year, they've been setting records in terms of selling building materials, including wood products. So they've done quite well, both in terms of volume and margin. But it's the actual manufacturers that have been doing the best. And again, you're tracking the sector. If you look at the publicly traded firms that own sawmills, like the Weyerhaeusers or the Canfor, West Fraser, Interfor, those kinds of players, you can see how they're doing in their quarterly earnings. They're doing extremely well. So we talk to dozens of forest industry professionals every week on our team, and I talk to sawmill manufacturers or the executives weekly. And I had a conversation with a guy last week who was an executive in charge of sales for a large manufacturer. And I said, man, you must be having fun. You must be really happy right now, right? Because he's in charge of sales and he's selling at these high prices. And he said, Brooks, he goes, I'm miserable because I have to tell so many people no, because they literally just have sawdust in the warehouse. I mean, they sell and ship the board the second it's cut. And so they are making a lot of money right now, but if they could produce more or ship it faster, they would. And so this constraint is really at the mill. This is really about all these guys who are running as hard as they can, trying to catch up to where demand is. And one thing that is probably helpful here in terms of the supply chain, because it affects other industries as well, is, the forest products industry also has a labor issue. If sawmills could hire more people and add more shifts, that could help get things back in balance more quickly. But the sector is labor constrained as well. So technology has helped with that. But meanwhile, they're still having trouble filling all the slots at their facilities.
Right. So as you mentioned, there would be a lot of demand from the repair and remodeling markets and home builders. And I read according to Freddie Mac, the current supply of single-family homes is 3.8 million short than the demand. So home builders would need to construct between 1.1 million and 1.2 million single-family homes per year to meet long-term demand. And that is according to the National Association of Home Builders. So obviously they are going to need a lot of wood to build those homes because wood framed units, they make up about 90% of new homes. That is according to Bloomberg. So do you think that these mill owners, they will be building new mills to meet with this demand in the coming months?
Nina, that's really helpful context because it does give people a sense for how many homes we're talking about and the amount of wood that's going to be required. So if I'll frame this to your question there's a couple ways. In fact, there's four main ways that lumber manufacturers can increase the supply of lumber. One is, as you mentioned, you can build and open a new mill. Number two is you can reopen a closed mill. Number three is you can expand capacity at an existing mill. And the fourth way is you just simply add more shifts. So you run more hours in a day. And in the South, all four of these have happened at a lot. In fact, the most important one is actually number three. It's the expansion of capacity at existing mills. So it's interesting. People focus very much on the building of new mills because it's a very sexy and exciting thing, right? It's a lot of CapEx. You get a lot of new jobs. But actually, most of the increased volume comes from expansions at existing mills. And since last year, let's say since the middle of the year, in the past 12 months, in fact, we have added about 1.6 billion board feet of incremental capacity. That includes new mills and expansions and reopenings to the base of production. And we've got about another billion board feet in the pipeline that'll open up and be ready to go by the end of this year. And that gets you to a level of production and a level of capacity where we are meeting or exceeding current demand levels. So that, in terms of the supply and the demand and where those lines cross, just on a volume standpoint, we're going to have the amount of iron in the ground, the amount of boxes with machinery in them required to cut round logs into those rectangular boards by the end of this year. And so you start to see things come into balance by the end of 2021.
So where do you expect lumber prices to go in the coming months with all this expansion and production in capacity that you mentioned? And do you expect volatility to continue?
So the volatility, I don't know. On the price level, I expect prices to moderate by the end of this year. Right now, what you're starting to see people adjust and delay their projects. I mean, the reality of the current price level is just too much for some people. And some people just aren't in a hurry anymore. So right now, it's about replenishing the inventories in the warehouses and just getting the volume out there at a level that can meet the needs of the current home builders and the R&R projects. And again, when you just doing the math, right, this is sort of an adding and subtracting exercise. If we look at aggregate demand and the volume required to do the projects that people want to do relative to what the sawmills are able to produce, those lines cross later this year. And when those lines cross, you expect prices to moderate as a result.
That's good to know. So switching gears a little bit, I wanted to talk about the case for investing in timber. And most of us have portfolios that have a lot of exposure just to biggest tech companies, the Apples, Microsofts, Googles of the world. So do you think investing in timber can provide a lot of diversification benefits or maybe some inflation hedge? Talk to us about your thoughts about investment case for timber.
Yeah, thanks for that question, Nina. So the timberland investment case is one that it does stand out a little bit from the pack because it does have a little bit of a long-term profile. It's probably a hard asset investment case. If you look at the beta historically of hard timberland assets, like many other hard land assets, they have low correlations relative to the overall stock market. The volatility isn't quite there. They don't have the liquidity. And so that liquidity, that lower level of liquidity, which is a negative for some investors, In the case of timber, it's what allows it to be a diversifier in a portfolio. No matter what the S&P 500 is doing, your timberland and your trees are out there. They could care less what the stock market is doing. They're going to be out there growing, and they're not liquid enough where they're being traded every day fast enough or quickly enough where they even feel the iterations of the stock market. So as a diversifier, like many hard assets, timberland has proven to be quite effective. I even remember one of the stories that sticks with me is during the 2007-8 recession, I remember talking to a timberland investment manager, and he was about to do a roadshow where he'd had to talk to his clients. And the timber portfolio they were managing at the time had dropped a few percent, 3, 4, 5%. And he was worried about having to share this news with investors. He came back from the trip. I said, how'd it go? He said, oh man, he said it was one of the best trips I ever had. He said, I would talk to all these asset managers out there and these investors, and they would say, oh, you did great. The rest of my portfolio dropped 30, 40%. And timberland did just what it did, which was to stabilize. It just dropped at a modest level. From an inflation hedge standpoint, the case is pretty compelling more from an unexpected inflation standpoint. If you already own timberland assets, the data shows going back 50 years that it is an effective inflation hedge. I think the challenge comes with when everybody starts to expect inflation to rise at the same time, it effectively bakes that expectation into the price of the asset. So if you're already in the sector or you own companies that already own timberlands, there's a good chance you'll benefit from that from a hedging standpoint. But if you're buying in now, there's a good chance you're also going to be paying for that benefit. So part of it is, are you in the asset already, or are you trying to get into it now?
Excellent stuff. Thanks so much for your insights, and thanks so much for joining us today.
Nina, thanks for the invitation. Best of luck.
I hope you enjoyed the conversation with Brooks. Now, if you want to invest in the commodity, there is no ETF that specifically and exclusively tracks the price of lumber. There are 2 ETFs that you can use to invest in lumber and timber companies. The larger one is by iShares. It is the iShares Global Timber and Forestry ETF, ticker symbol WOOD, easy to remember. It holds 25 global timber and forestry stocks. It's a market cap weighted ETF and has an expense ratio of 46 basis points. The second one is the Invesco Msci Global Timber ETF. The ticker symbol is CUT. Again, easy to remember. It holds 81 timber companies and has an expense ratio of 61 basis points. West Fraser, which is the largest lumber producer in North America, and Brooks talked about that, Weyerhaeuser, Rayonier, Potlatch, these are among the top holdings in these 2 ETFs. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. Also, make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@sachs.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.